Hey guys, it's Will here. Wanted to talk about Bitcoin in terms of the charts and some of just the overall markets right now. So let's start with the the VIXy. The VIX is the volatility index. I'm looking at the VIXy here. You can see that it's up 5%. So there's a bit of a bump today. We had this flat period where we kept bouncing off support, and so now we're sort of potentially heading up because it's been in this flat. So it's had this down period, then a flat, and then because the 50-day moving average is also getting close here, so we're poking up above that. So usually a lot of times when stocks cross up a 50, usually when on its upslope, like here, you see that huge spike. So there's a chance, but we've seen a few things that poked up here, but the 50-day is a resistance line usually. So anyway, and also on the momentum, you can see that it's been rising for some time here, even though it's been flat. So the Russell 2000, we broke down below the 8 EMA, which is what the T line we call. Some people use the 21 EMA as support. You can see right here it's supported at the 21. So for them, this would be still above the T line. It's the first time, above the 21 EMA still. But it is concerning. The same thing with the SPY. It's broken down, but we've seen it happen a few times with the 21 EMA. So obviously, as you break down more, then that would be. So these are not just predictive, not really predictive, but more of like indicators of when you would sell. And you could sell a percent of your position at certain points, like 25% at the 21 EMA and 25 at the 50 or 50-50 or whatever. And you also, some people have the 200. So you're way up above those. You'd have to take a lot more loss if you let it go down further. Depends when you got in. Dow Jones, it's been generally flat for quite some time, but we have a down day. This is pre-market as well. It's only 8:18 in the morning. So TC2000 shows you the pre-market stocks, as I mentioned yesterday. You can also go on this watch list and also go pre-market, and this will only show stocks that are trading in the pre-market. So sometimes some stocks and ETFs aren't trading right now. So this gives you, and if you sort by percent change, you'll see kind of the crazy stocks, or what I call, the GameStop, AMC. There's some stuff going on. They're trying to go after hedge funds and short sellers and stuff. So it's interesting, but you don't have to just look at the top, the highest percent gainers right now, but this gives you all the stocks that are in the pre-market, that are selling in the pre-market. NASDAQ still above the 8 EMA. So that's the market. They're still okay in some respects, but there are some worrying signs, and especially like the Russell there, breaking down, closing below. But we can see momentum crossing down as well in many of these indices, especially Dow, and NASDAQ is starting just to curl. So that's the last one in that sense, the best one in terms of the charts. So for Bitcoin, there's the GBDC grayscale. I'll use that and also show you the Bitcoin US dollar chart. One reason I like to use the charts is to remove the emotional and the guesswork. So this 8 EMA, or like you could draw an upward trend line. When you break that and you close below it, so this day it came down, pushed back up. So if you want to wait, see what happens at the end of the day. This one closed below, that would have been a sell point. If you drew a trend line, you might have waited a bit longer. So when you start to see like a down, and then you see this candle, so people will buy like, oh, it's a dip, right? They'll buy the dip. But chart-wise, it looks really bad. You've broken down, you're in a downtrend here. big down candles below the 8 EMA, broken the trend line. But it's just the initial break of the trend line. It doesn't necessarily mean, you have to have, officially for a trend line, you have to have this lower high situation like this. And so just that first, break of the trend is not necessarily the end of it, but it's definitely a bad sign. So when people see this, like they'll buy the dip or they see a big up day and they're like, okay, we're back right here. They'd say, we closed above the 8 EMA. But what happens is you start to draw this line across the tops, and you hit that as a resistance. And same thing, it came up a bit that day and then went down. So now you have this trend, forming. And same thing here, you have a bit of a rebound, but it bounced off that line. So now you have this established trend line like that. So, and I also look at the 8 EMA. So when I'm down like this, when you're seeing this downtrend here, I'm not going to be buying it, even if I see an up day like this here. You have a good day, okay, we're back, or that's the low or whatever. But I want to see this start to go up and start to establish higher lows. So now we've got lower highs and lower lows. So you can see that, we've technically, if I draw a line at the low here, and then we have another one here, we're starting to establish lower lows. If I go back to TC2000, this is the grayscale Bitcoin. There's a few others. In Canada, there's QBTC. You might be able to get it in the States as well, but it has a similar look to GBTC. So anyway, what's happening here is you're staying above the 8 EMA, except this right here. If you use volatility stops, you might have stayed in, or if you're using the 21 EMA, which is a lower moving average, you could still be in this. So if you're using the 21 EMA, you'd stay in until down here where you broke down below it. But in any case, there's a couple of things that help in TC2000. If you want to get a free trial or $25 off purchase, check out the link in the description below the video. I've got the gold plan, and I use real-time data, US real-time data. So what you can see here is we got started to close below the 8 EMA, a big gap down here, and you have these red volatility stops, which is a good indicator that you're flipping. It doesn't always work. Like here, you had one day right here. I don't blindly just use one thing. But and also, like if you sold when it broke down here and it went back up, you could potentially get back in. It's not going to work every single time. Like here, you sell in the red, you buy back on the green, and then you ride that up. Generally works, and of course you have a sell stop, so a stop loss, and basically, you're not going to get every single time have a big uptrend after you buy it. But we've closed below the 8 EMA, and then it just continues to drop. We've got, like I said, lower lows here. If I draw, or like what I'll do is, let me just do the highs first. So I'm using the shift key. Shift key gives you a flat line like that. I'll move that out of the way for a second. We bounced here. You can see it in hindsight now that we never made it up to that high. So that's a bad sign. And now we have another thing. A lot of times once you break down below the 8 EMA, you'll start to see a pullback towards the 8 EMA, but then it bounces off the 8 EMA. So don't just buy, like when you see this next candle being up, some people will buy that, but because they're trying to buy dips and stuff, but you want to see it break and start to establish an uptrend. So the other thing that can happen now is we have 50-day moving average. So is it going to support at the 50? We can draw lines at the lows as well. and you can start to see lower lows and lower highs, as I mentioned. So that is not a time, in my opinion. In terms of trading, like some people are trying to buy lower and they think it's going to go to hundreds of thousands, and they're just trying to get in a lower price, like dollar cost averaging and things like that. But just from a trade, you can see the relative strength is coming down compared to S&P. Also, we had a break right here, MACD cross. So I can put arrows here. I can put an arrow down at the derivative oscillator that shows, and before it crosses, you start to see a decline in the derivative oscillator like that. So these two are related. It kind of shows the distance between these curves, and you can start to see, you know, the downslope obviously of the PPO as well, the MACD. You have that downward trend there. So like so then what I'll do is draw a line down across the tops of the candles here. So I would wait for it to, you know, to start heading up again in an uptrend. So if it's supporting at the 50, starts to create a higher low and higher highs, green dots, uptrend, MACD crossing back up like this spot here. So another thing I'll do is draw a box around kind of the uptrend. So you see here, we crossed up over the MACD, we switched from red to green, we're above the T line, the 80 MA, and then once you close down below the 80 MA, red dot, and the cross of the MACD, I would be getting out. Other people, if they bought when they saw support at the 21 right here, and then maybe at this point when it broke, they would sell. And so it depends on your entry point and what moving averages you want to use. I think that's all I want to talk about today. So hopefully you enjoyed that. If you want to get a free trial, check out the link in the description below for TC2000. It's a great program. And we'll guys catch you later in the next video.